Welcome to Momentum Monday. Today is September 8th, 2024. Howard?
It's popping up. We're broke. The market's going to zero.
Yeah, well, stocks have definitely been under pressure in September and then at the beginning of August. And some people say that, when stocks sell off at the beginning of the month and they try to rally at the end of the month, this is kind of a sign of a bearish environment. But obviously the S&P is still having a great year. It's up like 14% year to date.
Yeah, semis are up 22%,
Yes.
and then Nvidia's down 30-some% the last month. So
Yeah, but it's still up, more than 100% for the
Yeah.
year. So definitely the past couple months or so, we're seeing a so-called rate cut rotation as tech stocks have been getting hit hard, the leaders of 2023 and the first half of 2024. And then at the same time, defensive stocks, sectors like consumer staples and
Where's utilities?
utilities have been rallying. I mean, they're low beta, slow moving
Defensive,
sectors.
little defensive. I mean, I think that the interesting thing here is if you pull back that NASDAQ chart, and the first VIX spiked to 60, where I was, skeptical but buying because I do. Turned out to be a good buy. But here we are at VIX 20, and we're almost back at those. Not that we're going to get VIX 60 again, but you can see we're in some kind of retest.
Yeah.
September, October moods generally just different. School, back to work, weather change, end of summer. There's just something psychological.
Look at all those red candles. I mean,
Think it. You can say, "Oh, everybody knows this, so it's true." Everybody can know something, and it can just be true, which is, I don't like September. Now, I love September because it's my off month. I work through the summer. I'm always working. You do too, because we follow the markets and are at our desk. But September is my month to just change the season, hit the road. And I think you're seeing it. Like, it's just markets are heavy. A lot of confusion about the election. It's coming down to the wire, no matter, based on the electoral votes, and no one seems to like either candidate. Usually you vote against the candidate you dislike the most, but
yeah.
nobody likes the candidate. Period. End of story. Where they swap them out. So barring swapping out Trump, there's no clear view of things until November. So what do prices have to be at for people to get excited? I ain't here, right? I was excited in the VIX 60 moment. I'm not excited at a VIX 20 where prices are, testing again. That's how bottoms can be made, but I also feel like there's more and more stuff stacking up on the bearish side. But not enough for me to be bearish. It's just, sometimes you sit on your hands. So that's how I'm seeing it. Now you tell me what you're seeing the rest.
Well, everything obviously depends on your horizon of
Yeah, I mean, I
operation.
don't need to be a hero ever. I'm done. So I'm looking for good entry points, and so unless I get a super alignment of things around the trade,
So yeah, if you're a short-term trader, obviously there's spinning a tape to be short or to be fading the morning gap. As you can see here, when we have like a slight gap up, there is a sell-off, a slight gap down. After a few days down, there is a bounce. So it's been kind of a range bound, fade the gap trade. So obviously this type of tape requires a different approach. It's not just chasing the gaps, usually the opposite. And from the silver lining is that for longer term market participants, those corrections end up becoming the best entry opportunities over time. And for example, Google, which is down significantly and down below its 200-day moving average. I mean, if you look at the monthly charts, like back in November of not November, October 2022, many of those stocks found support right there near rising 20-month or 50-month moving averages, and some of them are not too far from that. Again, some of those long-term leaders. So obviously, if something like this happened, this would be a great, I think, place to start nibbling, no matter what's going on politically or economically. And but what I'm doing, as I said, I'm still
That's
heavy
not pretty. That's
heavy
not pretty.
cash, and trying some intraday trades. I mean, for example, there was a great opportunity in Tesla that I traded last week. It only lasted a couple days, and I traded intraday both days. On Friday, I should have been short. I wasn't short. Like I tried Redfin because I thought, there's going to be a rate cut rotation and housing stock was showing relative strength, but I was very quickly stopped. I bought it. I sold it for a 2% loss, and basically wasted that downtrend day on Friday. I mean, I was also trading from a different time frame, like it was like 3:30 a.m. where I was at the time. So I guess I wasn't in a perfect condition to take advantage of it. But yeah, I've been mostly in cash, just protecting capital in the past week or so, even though I should have been heavily short. But I was on vacation. And for the next week,
Reminder, a vacation is a vacation. Even if you're good some days, you just have to.
for the next week, I'm not looking to press the short. I'm looking to fade the gaps. Like on Monday, if we see a gap down, I will try to play it for a gap fade, and the opposite. If we see a gap up, I will try to play for a. So mostly intraday, short-term stuff right now with smaller position size.
Well,
This is not
yeah,
the
I mean,
take.
it's not going to affect you. You take a week off. You just got to readjust to this. You can't cry over missing a key week for a swing trader because vacation's a vacation. So
Yeah.
pull up Google, for example. This is one that I've been super long, and now I have to go into defense. I've always said, above that 150 back in March, so right now it's like on the cutting line for me, meaning anything I added on the breakout above 150 and took some profits along the way, I'm ready to just get rid of again. But we're at that point right here where I'd be surprised if we don't go much lower, right? Like I'm bullish on Google, bullish on YouTube, but it's weaker than the average FANG. It was stronger than the average FANG a month ago, and now it's weaker than that. That's how markets work, right? It's fascinating, but it is what it is. You have to change how the data kind of in your position sizing changes. Google's going to have gone from the largest position to a smaller position, and then you just got to wait for some positive price action and some positive signal. So it's on. Everybody's watching it right now, which also could be leading to the extra volatility. But those red bars are, you just rarely have
A
gotten
lot
that.
of distribution, yeah.
Yeah, what's followed that is usually lower prices over the following months. Again, in the long-term scheme of things, no. But in the just in case mode of like, protecting capital, these things can go much lower. And what is the long-term trend line about 120?
Yeah, 120 is really the 20 months. Is it the 20 or the 50? Yeah, this is the 50-month moving average. So this is really the place where typically it has found support historically on big dips, but in 2022 it had a 50% drawdown. In 2008 it had like a 70% drawdown. So those things happen.
Yeah. Again, I'm using YouTube and Google more than ever, but again, there's headwinds in terms of Europe. They don't want Google, and the US seems to be winning its long-term war right now. The other thing I was going to say is that the market seems to be truly factoring that first rate hike. So the question is when that first rate declines. So when
And
that
how,
first,
how big is going to be? Yeah.
yeah, well, the Fed's always behind, right? So you assume they're going to cut big eventually, right? So you have that looking, but you don't, but that first rate cut, the market, the smart money's starting to front run it. And historically, the first rate cut after a long set of rises has been not good for the market. So again, combined with the mood of the market, September, October, combined with the fact that a rate cut is coming, because the Dems will do anything to get in. And they have a lot of ammunition if the market does come down quickly. Question, are we front running that first rate cut, or is there a bigger disaster looming when the media decides to just panic? Because, oh my God, even though they wanted a rate cut for fucking 3 years, they finally get one. So I think it's just got to be on your toes. Earnings season's behind us. I'm going to be out running around for most of the month working away from home. So it's like I'm being on the conservative side, especially with seasonal, unless true opportunities show up. I don't want to be staring at the market on from the road. And what was working that the biotech pulled back into a bit, like what is anything like continue
Yeah, I mean, a couple weeks ago we were talking
all
about
caps kind
we're
of
talking about biotechs setting up and for a potential breakout, and this changed last week. I mean, they're still looking constructively above their rising 200-day moving average, but last week everything got slammed, including biotech, including small caps. Like there was like a
anything
risk
risk
of
on got slim. Anything risk on got slim.
like currently the best looking chart is the one of long-term treasuries, which is typically not
Yeah, and
bullish,
gold.
not
And gold.
bullish for stocks. And gold too. Yeah, gold is holding well near its
No
all-time
one
highs.
is talking about gold, by the way. Everybody's talking about crypto. No one talks about gold. We replaced the few gold bugs with billions of crypto bugs, right? So gold will keep working because it is a true historical hedge
Yeah.
against bad government. Bitcoin is a digital version of that. The shitcoins are going to. So what were you saying about? Yeah. So keep it on gold. Not that that's like a growth asset, but I'm long. What's what? So you're saying TLT? What are you saying about rates?
I mean, rates are falling in anticipation
Yeah.
of that first rate cut, and
Correct.
TLT seem to be setting up. I mean, this is a very big level here, 100.
Yeah, but
Seems to
I
be
think we're
setting
going
up.
much lower on rates, right? I'm not saying we should or shouldn't.
So in the longer term, yeah, it seems like this is a something to own a little bit of, not for the dividends, but for
Oh, but of
the
course,
capital gain.
You should have been locking in some of those short-term yield trades. So you're going to start. All these things will eventually help. The question is, what are the prices in the market to get really rich people excited? Everybody's already yet. So the way I see it, Ivan, is like if you're super rich and there's so many Americans with 10 plus million in treasuries, so many. But at what point, if you're 20 or 30 million in treasury, which are in the tens of thousands of people in this country, does it become interesting enough where 3% or 4% you have to own because you're living a good life, right? And so with young people fully levered and degenerate and like not understanding how markets work, even though there's so much cash on the sidelines, what will it take for super wealthy T-bill providers? Because Buffett's more of a seller, it seems, than a buyer, at least tech and Apple. And, so what will it take for those people to buy
Well,
stuff?
I'm
No one
thinking,
knows that because it's a joke. Like, because
yeah.
they're rich, because they are super rich. They have a good life, and aggravation in terms of trying to stretch their yield in the stock market to 10-12% when your prices need to be reasonable. So go ahead with this.
Maybe rates under 3% will
Correct.
make them,
We don't
think about
know, but like,
allocating somewhere else.
I'm so used to getting 5% that you're really gonna have to bang me in the head to take my extra cash to buy semiconductor stocks, you know? That's me. I'm not talking about people with 50 million, 30 million, 20 million in T-bills. You need to really shake them to say, listen, interrupt your good life to go buy the S&P, especially people in their 60s and 70s. So I think people just have to know that. Doesn't mean the markets won't bounce Monday and look on to all-time highs, but the price damage is real. The sentiment damage is becoming real. The seasonality is real. And not that I care in the end who's president, like people will figure it out in this country or not, but there is really, people are voting against both candidates right now, which is not a good sign. So with that, I'm just like, be careful.
Yeah, definitely.
What's working? There's got to be stuff working that you're looking at.
There's not much how it's working. There are like a few biotech stocks, individual biotech stocks that are looking kind of constructively, but this is not really a place where you can enter with the size. So really in the past week, it's been almost everything was hit and sold for the beginning of September. So there's not really much working that well. And as I said, some of the housing related stocks are holding, like home builders, Redfin, Zillow. They're holding a little bit better, but they're still not looking
That's great. They're
great.
rate related. Yeah.
So this is really what's holding right now better, but really not as I said, not a place where you can really chase it long. And for anything more than like a quick bounce, short-term trade. So really nothing really excites me on the long side except treasuries, which is ridiculous, but things can change in a day or two, especially as, we're starting to get stretched on the downside. So it's normal to see some short-term bounces. So I'm going to play the short-term bounces, probably intraday or really short-term swings, 1 to 3 days, 1 to 5 days.
Yeah.
But nothing really excites me. As I said, coming into next week is treasuries, and since they're a slow mover, like I would look into leveraging that trade somehow with some options. That's basically the main trade I'm looking at right now. But things can change very quickly in this tape.
Yeah, look at AGI. Here's a gold stock that's shared with me. I mean, damn.
Yeah, I mean, it's in an uptrend, pulling back to its 50-day. So if you see this stock going back above the previous day high, that would probably be a place to enter with a stop at the previous day low.
Okay.
This is typically how I would approach it.
But on the monthly, it's breaking up. Right, it's right here. Like so.
Instead of blindly buying the dip, just wait for some proof that buyers are stepping up. So the previous day high.
Yep.
And then stop below. Always use a stop.
Saying those are the charts that are showing up in my, trends with no friends and
I mean, gold is holding better than gold miners for whatever reason. You can see gold miners getting hit with the rest of the stocks.
I just don't know the space. I'm just blocking charts. And
I wanted to mention just one more thing. Because you mentioned Google, I know it's been one of your favorite long-term holdings. I mean, obviously, nothing business-wise, nothing has changed for Google. There's still a cash printing machine.
Yeah.
But in general, you should never fall in love in any one stock, because in 2003, 2004, when I was just making my first steps into the stock market, I remember some girl telling me that her entire portfolio is in Walgreens stock because, it's very safe. I don't know what happened to her later, but look what happened to Walgreens, which was considered a blue chip that pays a good dividend. Like sometimes companies get disrupted.
It could have been the first lady. I mean, you probably knew her back then. Holy smokes, Walgreens! Wow, I was just in one. There's one on Coronado. I should have known. Coronado actually is an okay market for. I always wondered, like, why is there a Walgreens on Coronado when they opened up like 6, 7 years ago? You know, we had our local Rite Aid, which was like local and hokey, and like how much toothpaste does the island need? You know, with Amazon, how many drugstores does the island need?
I
And sure
mean,
enough,
tourists
Walgreens.
need it for sure, as
But
they
just let me
visit.
just tell you,
Yeah,
I was in yesterday. I got a call from the pharmacy to pick up, and I went to Walgreens, assuming I was now at Walgreens, and which is much nicer than the Rite Aid, you know, the old Rite Aid across the street on Orange, and just as messed up as any other freaking pharmacy. Everything's behind, and this is on Coronado. Everything's locked up. There's just no point at this point. Anytime I go to a Walgreens other than an emergency, which hasn't happened yet, knock on wood, um, there's just no there's just no point, and there's just too many of them. The management screwed it up, and it's just a sad. It's just like Bed Bath and Beyond, I guess. They'll look back and look at this thing, and it's not just poor performance, it's just management leveraging poor performance. And
yeah.
you got to be careful. But I don't you think you can put Walgreens with Google, but you never know.
Well, I'm
Uh,
not comparing them, just saying in general, just don't fall in
yeah,
love in
look at
any one stock.
AutoZone, which is like the best. I don't know how many people have been short that stock.
Yeah,
I used to
incredible.
short that in like the 90s. I swear to
Yeah.
God, because it was like, what?
Wow.
Internet's going to kill this. I remember in the bubble, it was like supposed to be short the retailers. And that hasn't worked out too well.
It's under the radar of so many people because, they don't trade a lot of volume, obviously, because of the high price, and they just keep going up.
Well, if you
Except,
trade the stock, you get oil on your hands, right? You can't come out of an AutoZone looking clean. So, but look at that, Ivan. So I was
yeah,
looking at this, anyways. So, but right now it's the degenerate economy type of stuff that's out of practice. The stuff that's working, Ivan, too, is like CBOE, stuff that's like volatility focused. Um,
yeah.
I don't know if the
The
Nas,
the
I'm not wrong.
exchanges,
Yeah, I don't think they can continue to run like this. CME. What about the Nasdaq? Did that break out? Yeah. So, so the underpinnings of the current economy or the general economy are still working. ICE was
slow
ICE
movers
was
as well.
another one, Ivan, ICE,
Yeah.
Intercontinental. And then the other one is that's breaking out. Having a senior moment. God damn it. And then the Chinese stocks still
There
like
was this one, VR, Virtu
whenever
Financial.
volatility increases, this does well. You
Yeah.
know, um, trading. So there is stuff working. I think Chinese relative stocks, even though I don't love them.
Which ones? Like a few of them, but in general, no. They've been
No, I'm just
no
saying,
place to hide.
as the Nasdaq breaks down, if these don't break down, you got another reason to think maybe, right? Okay, what's breaking down? Okay,
Not really.
Bubba,
Like I'm not touching
I own
those.
a little Bubba. Where's it at? No reason to own it. Okay. All right, everybody. Have a great week. Ivan, I'll see you next weekend.
Yeah.